Happy Tuesday, everyone. It is our weekly market update with your favorite realtor and lender. I hope everyone's having a good day. I'm still sick, but I am pushing through, working, doing the thing. The sunshine definitely helps. I went on a mini walk with our wellness committee here in the office. Let me invite Ben really quick. Which was fun. I went halfway and then walked back. Let me get him on here. Approve. Request. It's like checking out at the cash registers these days. It's like 55,000 questions. That's what it's like getting someone on a Facebook Live. So, oh, we matched today, babe. Look at that.
Oh, yeah.
Look at that. It's the blue day. It's so funny. Chris Ranch had on blue. Mark had on blue today. Adam Bartlett had on blue. Dan Dennis had on blue. It was a blue day today.
All
On
right.
Tuesdays, we wear blue. On Fridays, we do for Seahawks, but you know what I mean.
Right.
I was just telling people it's like checking out at the register to get someone on Facebook Live. It's like send an invite, include them, come back, then you accept it, then you come on.
Right.
So I was telling them I was still sick, but
Now
I'm making
here.
it through. Yep. And I went on a walk with our wellness committee. I just went halfway though.
Oh,
So it's a good day to call people when you have a funny voice, because then people feel bad for you. It's funny. Okay. Anyways, we are going to talk about the market today. I want to talk about our designated broker brought up a topic today that I wanted to talk about foreclosures again. I want you to mention the bridge loan again, because that got brought up a couple times and a lot of people are utilizing that. And then I'll let you talk about whatever you want to talk about.
okay.
So looking at the market for, and it goes backwards, like, so we're at the end of May, but we'll talk about May later. We're looking at April still. In Pierce County, inventory is up, which is really exciting. There's a lot more homes to choose from. We're still in a seller's market though, and most markets, even though homes are staying on the market longer, that went from 26 days to 35 days year over year. Month over month, it went up 20, year to date, it's up 20%. So don't get discouraged if the home's been on the market for less than 35 days. Depending on if you're a seller, your showings, how those are going can tell you if you need a price improvement or not. Otherwise, there may be some opportunity, but if you're a buyer in the market looking for opportunity, maybe seller concessions, those types of things, I definitely would try to look at homes 35 days or more. That could really help. Home prices are going up still. So month over month, we've been seeing that. So you need to jump in because interest rates are still going to be what they are. And now home prices are going to continue to rise. So that's a fixed cost that is a little bit more, not something you can control, but equity for your future. I was reading an article, 41% of sellers in the United States offered buyer concessions this year.
Wow.
So they are still happening. They are still out there. It's different house specific or different price points. So making sure you talk to your agent on the selling side, that if you're having conversations about concessions and what that looks like, as well on the buying end, you know, is this an area that has a ton of opportunity because there's more inventory, more competition on the market, things are staying on a little bit longer. I think there is some, so making sure that you understand your home purchase isn't an investment, especially if you're a first-time home buyer. Can this be rented out later? Is this something I'm going to make equity in that is going to get me to that next stepping stone of my home, versus does it have everything I want right now, versus can I live here for the next 5 to 7 years, if not sooner, and be able to do what I need to do to get to the next place.
Awesome.
That's the market update that I have to share today. Very exciting. I'm gonna let you talk really quick because otherwise I'm gonna lose my voice.
Okay. So I guess we'll go over bridge loans at the end here. So today I've got 3 pretty solid updates. The first one is on the first-time homebuyer programs in Washington. They raised the income limits on house key. Not by a ton, but it was approximately 5,000-ish on King County and then about 3,000 on the other counties. Which does help. They did a statistic and it was like, let me read here. I think it was 22% of people on average were just under that 5,000 raise that they did approximately. So what's amazing is that first-time homebuyer program now has a little bit higher of an income limit. They usually do adjust that every year. They do, housing limits. They do these things. They look at the statistics and kind of raise that up. So that's really good. So if you were right on the cusp of approving for that amazing program, the rates are usually a little better on those programs. Reach back out to your lender. If they haven't reached out to you, call us. Because I know right now there are some companies that still don't participate in some of the first-time homebuyer programs. If you don't have that option or haven't been told about that, reach out to us and let us help you.
Awesome. What qualifies the term as a first-time home buyer?
If you haven't purchased a home in the last 3 years would be the exact first time for all of the special programs. And then technically the first time home buyer programs if you do not currently own a house for most of the other first time home buyer programs. So
Okay.
if you sell a home and title and you don't have anything in your name, you could use Home Advantage, for instance, to buy the next home as a first-time home buyer program.
Awesome.
Yeah.
I think people think it has to be like your first home
Yeah.
ever, and it's not the case.
So the next 2 I'm super excited to chat about. This next one really surprised me in a way. I think we all kind of know this, but we tend to not truly understand it or look into it further. So NAR estimates that every 1% in rates either dropping or going up have around about 5 million more qualified buyers. And qualified is the key term. They may not buy a home, so you may not see actually 5 million people come in to buy a house. But for every 1%, the rate goes down. So if it's, let's just say around 7% today or 6.5%, whatever it is, and it drops that full 1%, you have about 5 million more qualified buyers. Now the reason I'm so excited about this is rates are super volatile. They have come down, they're going up with the tariffs, and not to get too far off the beaten path, but one thing, and this is right now, and we're seeing it with more homes on the market, and 41% of sellers offering closing costs, like you said, you have an opportunity right now to buy a home, get your closing costs paid for before all of these other consumers come back in the market when the rate goes down. So when the rate goes up is when you should be buying. You should be buying a home, getting your closing costs paid for, jumping in the market now. And then when they start coming back down, you're ahead of the curve and can take advantage of that rate while everyone else is, I don't want to say overpaying per se, but paying their own closing costs and maybe even adding more than what the purchase price was.
Yeah, when rates go down, home prices tend to go up, and that's a fixed cost where because there's competition, there's usually multiple offers, 50, 60,000 over list price. People are having to come in with low appraisal money. Like it does position people, especially if you only have your down payment and a small amount of money left over, you're going to get bid out of the market and you just won't be able to purchase. So
Well, this
it's
year
unfortunate.
I've been asked probably 20, maybe 30 times, like, what's the secret in this market? Where's the opportunity? Like, I want to find a deal. And I would say the deal per se, or the opportunity for consumers right now is when that rate goes up. And I know that most people would go, logical thinking, rates go up, I'm going to hold off. That's what I hear a lot. But the reality is, if you're losing 5 million qualified buyers, a seller then may not get the offers that they wanted, and it may sit on market more, which gives you an opportunity to possibly get not only a better deal, but then also maybe even get your closing costs paid for. Where, like you just said, when there's 5, 10, 15 clients making an offer on one home, they're not going to pay your closing costs. You know, they don't need to. There's competition.
Yeah.
So that is the opportunity right now in this market, is when these rates go up, jump in, go find your home. Because you can
I
always,
say jump in right now. I
I
mean,
agree.
there is a lot, and there sometimes is a little bit of a sticker shock on payment, and it will continue to build wealth for you. Like there is going to be an opportunity of what that looks like.
I agree. I agree. Kind of keeping the rates, because everybody is so sensitive on these rate topics. Fannie Mae just released
Hold on, time
yeah,
out. Who's Fannie Mae?
a
You're
government
speaking.
entity. So there's
Okay.
Fannie, Freddie. They do basically conventional mortgages. There's FHA. There's
So it's
VA.
like
So
the boss. It's like a big corporate boss.
yeah,
Does mortgages.
they're the exactly. They kind of back mortgages and take care of everything, and do the guidelines and all that. But this is amazing. Today I just read that Fannie Mae's rate forecast, they cut the rate forecast to 6.1%.
Nice.
What does that mean? Right? Because it's like, nice, that sounds great, right? Does that mean rates
Mm-hmm.
are going to go to 6.1%? Does that mean, what does that mean? Well, according to ICE data is the referring place, that should unlock basically like a refi boom, which will allow these consumers that did buy a home at 7-8%, these rates should come down to the low 6s, high 5s in the near future. And we should be able to help those clients give some relief on payment so that they can make sure to, start saving the money that they thought they were going to do by now anyways with the rates.
Yeah.
So that's phenomenal. What does it mean for actual rates? We don't really 100% know. You can't just say for sure these rates are going to come down. But when big corporations that basically run the back end of the mortgage industry state that they think this is the forecast, usually they're right. And that is good news for rates in the future, which gives me way more confidence in helping consumers buy homes, even if the rates go up a little bit, because there will be relief in the future to be able to lower that rate for them.
Awesome. So what does Future First Mortgage and Ben Larson do for those types of situations if they were to refinance within that year?
So not just that year, but we offer, it's called the Your Choice Refinance. Basically what we do is we help them narrow the costs of what the refinance would cost. So we can do some really cool stuff like defer a payment or two, give you a check back for escrow so that your actual costs of the refinance, you don't have to pay that in the future. I know some folks are offering a no-cost refinance, and the typical no-cost refinance usually would jack the rate up and then give the rebate to pay that back. And there are companies that are still offering that. The key to any refinance is to get current market rates at the lowest cost possible. So what we're offering is a Your Choice refinance that you can pocket that money, pocket some payment savings, maybe pay off some other debts, or apply that to the principal, and then essentially have a no-cost mortgage.
I love that. And hold on, now I lost my train of thought. Oh, do you do yearly mortgage reviews for people?
We do. Thank you for asking that. We do once a year for all consumers that we helped. We will offer what's called, so there's 4 things you should be inspecting every year. You should be doing an insurance review, a mortgage review, a real estate review, like a portfolio review of this, and you should be doing a financial review. If you're not currently doing those, get with your professionals and do that. We do that here with our consumers just to find out where you're at, how much equity you have, what your current rate is. Do you have a combined interest rate? If you have 40, 50, 60 grand in current debt and your combined interest rate is 12, 13% with all of those debts, but your mortgage is at 3, you know, your combined interest rate may be more than the current rate. And if you can combine all that together, you could save more money and then apply that to the principal and then pay off your mortgage quicker and save the interest. There's so many amazing ways to do that. But yes, we do offer an annual review. It does not cost any money, once a year with all our consumers and past clients.
I love that. Awesome. This is a lot of information.
It
so
was.
do you have anything else?
No, that was it. That was
What's
my
your
3. And then,
mortgage myth?
I didn't do a mortgage myth this week. We missed last week because I know you were out of town. So I'll bring it back next week. But I know you wanted to talk quickly about bridge loans. What questions did you have?
So we can bring that up to
Okay.
next week because I do want to talk about foreclosures because they are happening.
Okay.
It's a small amount of people, but when we're talking about debt and what's happening on the back end, there are some situations where people haven't been paying their mortgage or are in a position that potentially cannot pay their mortgage, and knowing that there's resources out there. So we talked about, you know, what needs to happen. If that's the case, know that it's a safe place to come talk to us. Don't walk away. Most people have equity in their home, and that could set you up for the future for the next couple years till you can qualify again, and look at all your options. I just think that people get scared and then they wait till they get a notice of default, or, you know, they have a foreclosure date and then we're trying to scramble and look at all options. I just want people to know that our job is to protect that asset of yours. And if you have a family member or yourself or anyone in that situation, it is confidential, and we can work through those steps and make sure that that gets paid off. You're moving forward before it's too late.
Great.
And on the mortgage end, if someone does foreclose or they miss, okay, let's talk about two different things. If someone does end up having a foreclosure on their credit, what do they need to do and what resources do you have for them to get purchasing? Like, what's the timeline? What resources do you have?
So I'll bring that up next week. I'll get the actual dates. I don't have it in front of me. I know one of them's 2 years, one of them's 4 years. And then if you do end up filing like a bankruptcy, there's those. So I'll bring that to the next live that we do.
Perfect.
So we have information. But yeah, I mean, it's to answer your question, there are rules and guidelines to where it is possible to buy in the future. I know a lot of people feel like you said, they get very, you know, oh no, I can't do it. And then they give their home away, or they maybe sell it to some short sale place, or, you know, quick claim it to someone and don't, you know, do the research they need. But there's so many good programs out there and a process. Just reach out to us and let's create a plan.
There's even companies, Jessica in the office, through like some of the counseling services that might be able to get you caught up as well.
Really?
So know that there's options, and that the first step is, you know, being okay calling and reaching out for help.
Yeah.
And we've all been there. We all go through periods of time where we need things, and there's no shame in it. I mean, I think on social media, it's like meant to be glorified that everything's perfect, and that's not reality. I mean, Ben and I could share stories being commissioned only, both jobs. So there's no shame in our game. And we are there to help you. We are human and real, and just want to get you through that next phase for you and your family. If you need us to call on three-way with you, we will. There's a lot of different options, but let's set you up for success.
Great.
And know that, yeah, you can get some help.
I love that they have, you said the counselings that can help and do that thing. I'd love that information for anybody that does reach out to us. Let's share that next week for sure.
Yeah, absolutely. You got it. Okay, let's see. What are we going to end on today? What'd you do over Memorial Day weekend?
Yard work and made the backyard and the pool area and the pool house, and we went shopping a little bit and just kind of relaxed and kind of got the pool heated and kind of cleaned up around and did some spring cleaning per se, I guess.
Yep.
Same as you.
And we went swimming.
Yes, we went swimming.
Yeah. We were just relaxed around the
Nice.
house, not feeling good, and went swimming
Yeah.
with the grandbabies and the girls and everyone else.
Below,
So
share what you did because I want to hear what everybody else was doing out there. Did you go someplace nice? Did you go camping? What do you guys do like traditionally? If you have that, share in the comments below.
you got it. Okay, well, I hope you guys have a good day. Lots of information. We could talk for hours on different topics and go in circles because that's how we are. But I hope you guys have a good day. Thanks for spending time with us.
See ya.